Hey, what's up you guys? It's Louis here. Welcome to the channel. So today we're going to be talking about what investment we are doing during this unpredictable times. I just uploaded a video about what's happening and why did the Feds cut rates to zero. So if you want to see it, just make sure to go and check the link in the description. Also, we're going to be talking about the money that you're going to be receiving from the government. But before you do that, make sure to hit the like button, subscribe, comment, and share with your family and friends. Now that you've done that, let's talk about all these things that are going on. For the past 30 days, we've been up and down in the market. The market doesn't even know where to go. The same way the market is going up and down, people are going in and out. And all this because of this illness that is going around. So just today, the Dow closed below 20,000 points. It was a crazy day in general. There was even a 15-minute trading halt when the market fell more than 7%. Things got really interesting when the New York Stock Exchange announced that it will close its trading floors. According to CNBC, the New York Stock Exchange said Wednesday that it will temporarily close its historic trading floors and will move fully electronic after 2 people tested positive for the coronavirus infections at screenings it had set up this week. The all-electronic trading will begin on March 23rd at the open, the exchange said. So that means that, starting next week, they're going to be closing all their trading floors and people are not going to be there. Everything's going to be happening electronically. So it's going to be a little bit different, but I believe that they have already tested the system and things are going to be all right. People are scared and they're pulling their money out of the market and placing it in other security. Many of these people, I believe they're baby boomers that are on the brink of retirement and they're trying to find a safe place that, to put their money. They don't want to ride out the market for a long period of time because they might be retiring soon and they want to have access to their money and the gains that they have obtained in the market. This is a domino effect and people tend to follow the trends. If some people are leaving the market, they want to leave the market. If people are buying toilet paper, everybody else is buying toilet paper. It is psychological and I think fear is what's driving the market. Since I'm thinking to stay in the market for a long time, I'm not worried. The number might scare you. The market is volatile right now, and you will have to endure it to come out ahead in the future. If you can't handle this, I suggest you to find somewhere else to put your money that is less volatile and give you a decent return. But in terms of the market, it's going to be volatile, for some time until we find some solutions, for this virus. All right, guys, so let's check my account. In the last 30 days, my Robinhood account is down over $33,000. And that's crazy. That's because the market just took the biggest dive since 1987. And people are just running left and right. This situation has been so critical that the federal government is planning to inject more than $1 trillion into the market to prevent a recession. But, I think we are heading that way because, the stocks and the market just keep on plunging down. My belief is that many companies will be hit very hard short term because of the ongoing situation, and we have yet to see the end of it. Just imagine, in the last month, the market has erased all its wins since 2016. So if you have ever wished that you could have started investing earlier, the time is now. You just got a new opportunity to buy companies at prices that they were being sold 4 years ago. I couldn't agree more with Warren Buffett when he said, "Be fearful when others are greedy, and be greedy when others are fearful." People will usually want to join everybody else when the market is climbing up. But, that's only out of fear of missing out. Right now, most stocks are at a discounted price. And if we get out of this quickly, and sometimes you will see your investment grow. Remember, when it comes to this investment, I don't think about the number or the price or the share price right now. I think about the company. Big companies like Delta, Disney, Apple, Facebook, Carnival Cruise Line are not going anywhere. And once this thing is over, those prices will go sky high overnight. In essence, you're buying a little part of a company when you buy a stock. The tourism industry is one of those sectors that is getting destroyed over this illness. So guess what? You will find really good deals there. Okay, for example, let's look at Carnival, ticker symbol CCL. Okay, And if you look back, 1 year ago, in the past year, that stock has gone down 83%. Its 52 weeks high was $57 with 69 cents. And right now you can get this stock for just $9.60. Now, let's look at Delta, ticker symbol DAL. For this company, its 52-week high was $63.44. And today, this company is trading at $24.30. That's just crazy. I mean, that company has gone down 33%. And now, do you believe that this company is going anywhere? I don't believe Delta is going to go anywhere. I think, the government is going to jump in and is going to help the tourism industry, especially the airliners. They're going to be helping them out. There's no way this company's go down. Another company is Expedia. Many of us use Expedia to buy airfares or hotels. I mean, I just used it about a few weeks ago to book some tickets. So now let's look at Expedia, ticker symbol EXPE, okay? And this company, its 52-week high was $144. And today, Expedia is trading right now at $47. So basically, in the last year, this company has seen a decrease of 61%. These companies have taken a major hit because of the pandemic, and things are not looking like they're getting better anytime soon. Now, talking about Delta, Warren Buffett bought 976,000 shares of Delta earlier this month for a cost of $45 million, which means each share was $46.40. So if he bought at that price and you can buy at today's price, imagine the gains when the airlines go back up. People will not stop traveling forever. So I do believe things will eventually improve. I mean, some people say and they comment about the 2008 financial crisis, and they try to compare, but this is totally different. It was a completely different serial event that created that bubble. However, it is a good thing that we have that to guide us and at least give us some comfort that the economy will come back to normal just like it did that time. The economy collapsed that time was because financial institutions and lenders started to jump hoops left and right to approve mortgages that were poorly regulated and, to people who were sometimes poorly qualified, who later started defaulting on these loans. Imagine there were all types of unimaginable loans, such as no down payment loans, stated income loan, and many others. I mean, the stated income loans were basically, a person could just state that they were making whatever they wanted to say they were making or whatever they wanted to say their salary was. So I could be working as a handyman saying, hey, you know what? I make $20,000 a month, and I was instantly approved without any questions. And so you could get away with anything you wanted. Then these mortgages were packaged and sold to financial institutions who held them and allowed investors to invest in them for a bigger profit. But then the housing market, which people thought it was going to go up forever, started to crumble. The economy started to slow down, and that's how things started to crack. With a slowing economy and people who had ARM loans, which rates started to change, were in the hole because they couldn't make the new and higher payments. They scrambled to refinance these loans, but the houses had lost so much value that they couldn't get a new loans, and so people started defaulting on their loans. This created a negative ripple effect, and like always, investors started to lose trust in these instruments and began taking money out of those financial institutions. So basically, these financial institutions were already up their necks, and whenever the investors started to take out their money, it was over for them. They just crashed and burned. This crash, on the other hand, is due to fear, misinformation, uncertainty. Now, uncertainty and fear is what's driving this market right now. Since we don't know how long this will last, when we will have a cure and a vaccine to eradicate this virus. People are just scared and they want to make sure, that they can get some return in their money. So they're taking their money in and out of the market, running, left and right, and they're trying to put their money in safer places, to ensure they get a higher return. In my opinion, the wrong thing to do is to sell when the market is going down. That's basically the only way you truly lose money. If you look at your 401k or your stock account, you will feel devastated. So if you can handle things like that, it is better for you not to look. Just let it go, read a book, watch some Netflix with the family, and decompress. Once this situation is over, things will go back to business as usual. So now to the IRS and the stimulus. So basically, the government is going to be rolling out an $850 billion stimulus plan to help regular people and some corporations. The IRS said if you owe a payment for taxes, you can defer up to $1 million as an individual or $10 million as a corporation. This will be interest-free and penalty-free for up to 90 days. All you have to do is file your taxes and you will be automatically enrolled in the program. So basically, don't think about April 15. You're going to have 90 days after that to make the payments interest-free and penalty-free. In addition to that, the government is going to send 2 checks to every American, for an amount that we still don't know, but people are thinking that it should be somewhere around $1,000. According to NBC, the 2 rounds of direct payments to taxpayers, each totaling $250 billion, will be sent on April 6 and on May 18, according to the proposal. There will be tiered payments with the amounts based on income level and family size. That's what the proposal says. This is not a new idea. It happened twice before, once during the Great Recession. During this time, the government sent money to every adult, in amounts that ranged between $300 and $600. In the last recessions, check went to everyone who filed a tax return, including people who received Social Security. It has been a crazy week already. What a roller coaster. We all need to remember that this is life and we're going to be facing difficulties from time to time. For me, this will be business as usual, even though we're all here, locked in our houses for now. I will keep investing, looking for deals in real estate. I'm going to have some cash parked in the sidelines just in case I find that deal. I'm going to keep investing in the stocks, buying more stocks, lowering my costs down. And that's it. Well, that's all for today. Make sure to like, subscribe, comment down below. If you have a different strategy for riding this crazy market and this crazy situation that we're all living because of this virus, comment down below and let me know and let us know. And I'm going to try to reply to your comment and let's just bounce some ideas. See you later.